Keeping Australia afloat, the country's central bank taking extraordinary steps to keep the global downturn from dragging on. A more powerful peso, the Philippines' currency's surprising rise reflects the country's remarkable turnaround. Of course, we'll have those details in just a few moments. Keep it here on Biz Asia America. All right, I'm hearing now that we do have our guest ready. Bill Evans, Managing Director, Global Head of Economics and Research from Westpac Securities. Thank you very much for joining us. You know, we heard about the Philippine economy. It's doing well. We heard from Hannah about the downgrades in the economy in terms of the projection for Australia. Explain to our global viewers who might be scratching their head a bit. We're talking about slower growth in Australia, but what's really going on here?
Well, Australia's been doing very well out of what I call mining boom stage 2. The first stage of the mining boom was between 2002 and 2008, where iron ore and coal prices increased by a factor of about 7, gas prices by a factor of about 5. So that gave us a big boost to our incomes, and that has also led to a big boost to mining construction projects, to the point where this year growth in the economy will be 3.25%, and 2.4 of those 3.25 percentage points will be contributed by mining investment. But we can see the end of the projects. The projects are starting to reach completion stage. And by 2014, the slowdown in the mining investment will subtract about 1.4 percentage points from growth. So we need to rebalance the economy, move back towards interest rate sensitive parts of the economy like housing, construction, communication, retail, and that means lower interest rates. And that's what the central bank is aiming to do with these interest rate cuts.
Bill, I want to ask you, for a lot of folks watching, we know about the demand growth in China when it comes to mining. You're talking about some of these projects coming to completion. There's a bit of an issue here because part of the strength in Australia has come from demand from China. What are you hearing from the folks with respect to that demand?
Well, the big boost to our incomes came with that big jump in the prices of those commodities that we produce. And whilst those prices have fallen somewhat over the last few years, most of those gains have been retained. So China's played a very important role in leading to a big jump in the value of the goods that we export. But as I indicated, anticipation that these prices will hold up has led to a big boost to exploration and of course to construction. And we expect that China's demand will continue to remain strong, and therefore the goods that we are now in a position to start exporting over the next few years will actually continue to be bought by China. For instance, if we look at our natural gas industry, in 2015 we're expecting to boost our exports of natural gas by 50% as these projects reach completion. In 2016, another 50%. And we expect that, and of course our iron ore industry and our coke and coal industries that support China's steel industry are still very, very active, and we are still low-cost producers in those sectors. So we feel very confident that China's growth will continue to support sales in those areas.
I want to read you something from the central bank governor in Australia. Quote, higher than expected, referring to the currency given the low export prices and a weaker global outlook. Obviously responding to a question about the Australian economy and how it's being affected by the stronger currency. How do you see the strong currency in relation to the economy in Australia?
Well, the currency has been higher than we would have normally expected. We're not, of course, surprised that the currency is a lot stronger than it was 10 years ago, given the sharp jump in the prices of those commodities that we export. But with the fall in those prices recently, we haven't seen an adjustment in the currency. And the reason is that international investors are now seeing Australia as being a very attractive place to invest. Our interest rates are relatively high. Obviously, there's lots of aspects of stability around our governance and our political situation. And I think international investors are unnerved by prospects for the euro in particular, and also by the huge jump in the amount of bonds that the US will be offering. So we're seeing these international investors rebalancing their portfolios, and Australia has been a beneficiary from those global capital flows. Of course, the cost has been that it's held the currency up, and it's been a big drag on industry like manufacturing, tourism, and education exports that tend to be impacted by it when the currency doesn't fall. So it's been a benefit to us in some ways, but there's been this big cost in the other ways of holding the currency higher than we would have normally required.
Great analysis. I want to thank you for your time. Bill Evans, Managing Director, Global Head of Economics and Research for Westpac there in Australia.